Hello, good morning to our morning call. It's Friday, December 14th, a time of year where market activity tends to slow down, liquidity dries out, and people prepare for the end of year. This is really not what we're seeing so far, and overnight we had some renewed weakness. If we look at the first two charts here, we can see that overnight in Asia we had some weaker than expected data from China, retail sales and industrial production. Both turned out to be weaker than expected. We may have a technical issue with the charts. So what we're basically seeing is that we're seeing the renminbi move back up towards the 690 area, and we got the Nikkei down 2%. In response to this, we also seen the S&P weakening again. We're down 0.7% on the day, and that basically means we are once again just toying pretty close to this key level just ahead of the 2600 level. We haven't really seen a close so far on the futures below 2635, I believe, and we're trading below that this morning. So again, we have some potentially again a day with some market sentiment being on the weak side, and that's leading into next week where we got the FOMC meeting. But I think we'll just start off with the ECB meeting yesterday, because it doesn't really seem like we're seeing any light at the end of the tunnel just yet. I saw the ECB was basically saying the economic risk has moved to the downside.
Yes, Ola, you're completely right. So what we have seen yesterday is a dovish Draghi. He has revised down GDP growth from 1.8% to 1.7%, and basically what he has been saying is that we won't see. Yes, he's gonna stop purchases under the asset purchase program of the ECB this month, but still we are not going to see a rate hike until after next summer. But most importantly, he said that he will reinvest maturing notionals until indefinitely, basically, because he said he's going to go even longer than after the next rate hike. So the market is very dovish, and it started to think that we might not have a rate hike until 2020.
And that basically means that if you are looking for a pickup in yields on German government bond yields, you probably have to wait quite a bit longer. 10-year yields still hovering around just 26 basis points, and we still got two-year notes yielding negative 0.6. So,
but I believe that this can be also an opportunity, because until we see Draghi being supportive, or the ECB anyway, being supportive of the European economy, we can expect credits to be valuations to be supported as well. And what we have seen in the past few months is that the high yield European credit spreads have been widening faster than the high yield American credit spreads. So, there might be some opportunities in this space if we look at them.
Especially if the core rates are being kept suppressed for a while, and then again with that we will obviously continue to keep an eye on China, because some of the weakness we've seen in Europe has come from the weakness that is emerging out of Asia. And staying with Asia, we, as I mentioned, Chinese data overnight was disappointing, and it's actually leading up to next week where the China's they're holding their annual Central Economic Work Conference, and this has raised speculation that some additional stimulus measures are going to be announced. So China, obviously at this stage, needs to support its own economy, but also try to get through this trade war with the US. And so far the ceasefire is holding. And but despite of this, we're seeing some weakness here ahead of the weekend because of these weaker data coming out of China. But obviously a very important week next week with this conference in China, but also the FOMC meeting in the US. As I said, we have some technical issue with the charts this morning, so we'll just keep talking, Althea and me. But I was actually going to just show you a chart of the silver, because we mentioned yesterday it was poking higher. So far it hasn't really broken any levels, but from a longer term perspective, it seems like we're starting to see some interest coming back into silver, both against the dollar but also against gold. I put out an article on home.saxo yesterday where you can take a closer look. But in order really for silver to move high, we also need to see gold move higher, and right now we're trading around the 1240 level this morning. Last week we saw a 97% reduction in the speculative short position in gold, and that was all that buying happened between 1230 and 1240. So that's really a key area. that we need to hold now. So right now, this pickup we've seen in metals recently, it needs to be supported now by underlying demand, and we need to see that come in here between 12.30 and 12.40. Again, I think we'll just cut it short here, go straight to the calendar, because we're talking about Europe, and key data today is actually manufacturing and services PMI coming out from both France and Germany early on, and then later on we're going to have the overall US Eurozone data. And on top of the ECB meeting yesterday, that's going to be quite interesting. Otherwise, later this afternoon we've got retail sales from the US and industrial production and capacity utilization. This all leading up, as we mentioned, to next week, where instead of getting ready to our holiday, which obviously we will, but at the same time we still have to keep a close eye on the screens with FOMC meeting coming up and potentially some important news out of China. So stay tuned, have a good weekend when you get there, and see you again on Monday.